Okay, welcome everyone. This is a consulting testimonial with Eric. Eric, please introduce yourself and let's get started.
Yeah, absolutely. Thanks. My name's Eric Boshart. I'm a real estate investor in the Dallas-Fort Worth Metroplex. Have been for a few years now, and really focused on the single family side, and moved into larger scale properties over the past 7 or 8 months, which has been great with the help of Rob. Thanks for having me.
Good to hear. Good to hear. Okay, awesome. So people get a better understanding of kind of, I don't want to call it a before and after because it's not like, we're putting you on a diet or anything, but talk about where you were before. You sounds like you had single family experience. You're a pretty experienced investor. But then you wanted to start working with me and kind of take the path further. So talk about that.
Yeah, absolutely. I got my start doing hard money lending just with my own personal money, and so it was really private money, and saw the returns being capped, just with the nature of the loans, and so I realized that the people that are really you know building wealth here are the borrowers. So I decided to be a borrower myself, and so that's how I learned the trade, is through lending, and then really started investing in single family homes. Went through the Bigger Pockets kind of entire library, and that's where I got my knowledge. And then did a few single families. Pretty much met every single hiccup that you could possibly meet. Learning what the big five trades are, learning rehab budgets, learning lending costs, all of those specific nuances to single family homes, renting versus Airbnb. Really cut my teeth in smaller properties, which I recommend to anybody, because if you mess up big on a complex, you're bankrupt for the rest of your life. If you mess up on a 2 bedroom, 1 bathroom, you'll be able to get out okay. So I think I did probably 9 or 10 single family homes. Had a couple flips in there, but basically they were all burrs, which is a pretty common single family investing method. And then really the next iteration was thinking, how do I scale this? My cash flow on a monthly basis for single family homes was $400 to $500 a month. After debt servicing and operating expenses and utilities, which is great, but you really have to do 20 or 30 of them before you can, hit that financial freedom. Everybody has their own personal goals, but that was really where I saw my life going. And I thought, this is going to take 5 or 6 years at least. And I have to go out and raise other money. So started doing some research on how to scale my business. And I've been doing it with my brother as well. And really, I think the next organic iteration was syndication. And so we started reading every book that was out there, and one of the books was yours. And I also listened to a podcast that you're on that was I think it was called Syndication Real Estate with Whitney Sewell, where you were a guest, and really thought what you were doing was essentially exactly what I want to be doing. You've scaled up a business that is proven. I thought I was in the greatest area for multifamily syndication, and so that's when I reached out to you, and I kind of was shooting a bullet in the dark and saying, whatever I can do to learn from you, or whatever I can do to be a mentee of yours, let me know, because you took the path that I think is best for my business. And I was fortunate enough to start this relationship with you.
Yeah, it was really good timing for both of us, because that was right around the time that I was starting to think about putting together some sort of coaching or consulting, and then you just happened to reach out, and I thought, oh wow, well, I need to figure this out. How can I add value to you, and what does that relationship look like? So it was perfect timing. We connected. And then since then, fortunately, we've both been very successful, and my consulting business has grown substantially. And then
Awesome.
let's talk about, well, before we talk about closing your first larger deal, most recently, let's talk about some of the things that you have learned along the way, and kind of what were the things that we did together that helped you kind of unlock, whether it was strategic or mindset or whatever it was that helped you unlock the path to closing that first bigger deal.
Yeah, absolutely. I think the single family world is a relatively small one and an easy one to enter. You get accepted in a couple of Facebook groups. You meet all of the large off-market acquisition firms or wholesalers, which is kind of a dirty word, but they don't like to be called that. But you have these large-scale off-market acquisition firms. You get on their email list. They send you the deals, and you can go to the showing and put in an offer, and it's a pretty easy. The single-family process is a pretty easy process. Multifamily is an entirely new world that I just had no visibility to. So it was, the journey of 1,000 miles starts with one step. And I think what was most important when we started our conversations was, okay, I think I know how to underwrite, because we spent a few weeks underwrite, which was probably the thing that we spent the most on, and that's where we really started. It's like, okay, I think now we've run through a couple test properties using your model, which I think is available on your website. Use your model, learn how to underwrite these properties. Okay, I know how to do that. So if a deal came across my lap, I'd be able to analyze it properly. And okay, so where do I go from there? And I think it was really, the not only telling me where to find deals, but and how people find deals, but the targeted introductions in this area was incredible. And I don't know, I don't know this market specific DFW, but I thought that was incredible that I started getting deal flow, and I was able to use your model to be able to underwrite these in a really targeted way. And the most important thing, I think, that you can get from one-on-one coaching and consulting is not, you can get the model, you can read your book, you can listen to your podcast, but every single deal that comes across your desk is going to be different. You have a 50 unit, 150 unit, a 13 house portfolio, and they're all going to have their each specific nuances, their problems, their upside. There's different classes of apartments, which I'm sure you get into a lot. It's figuring out, like, why are they having this specific line item in their model this specific way. And so that one-on-one coaching allowed me to really understand, I think, most of the problems and the nuances of large scale syndication in a really targeted way.
Good to hear. Yeah, I appreciate that. So yeah, that definitely sounds like a major barrier for many people,
Definitely.
especially if they're coming from the single family side, because single family underwriting is very different than multifamily, which, we do say in this business that, hey, if you know how to do something with one unit, then you can do it to 100. And that is partially true. It's largely true. It does speak to the scalability of multifamily, which goes to your point of, okay, how do I scale this? If I have got a vision for whatever my number is for passive wealth or freedom, you know, if you can do 100 units, you can do 1,000, and so on. And so that definitely makes sense. But from the single family to the multifamily, there is added complexity for sure. So
Absolutely.
let's talk about the deal that you recently closed, and just kind of share some of the highlights, maybe some of the struggles.
Absolutely. So it took a few months, and I think that's pretty natural to find the right deal for me. We went through a lot of deals. Dallas Fort Worth is is a very, very competitive market, arguably one of the most competitive markets in the country. So being competitive as a first time, syndicator or sponsor was a really tough thing to do. So I think, I underwrote probably, I don't know, 50, 60 deals, put out 4 or 5 LOIs, and then eventually came across a single family portfolio, which was really the perfect blend of my past experience and my new venture of scalability. And so this portfolio we found off market through a large scale off market acquisition firm, and it was 13 homes in Terrell, Texas. Which is a new market for us, but as Dallas expands and continues to grow, those outside neighboring little towns and cities are facing rapid appreciation. So this was a portfolio that had really poor accounting, really deferred maintenance. Tenants really didn't like the previous owner at all. And it became really, the lease agreements were bad. It became really a nightmare for the previous owner. And so those are really the best problems to have, because there's nothing wrong with the asset itself. It's just what was wrong with it was the way it was being run. And so we got it at a really good price. And I'm happy to go into more specifics on numbers. But we got it at a really good price, something that I think was probably 30 or 40% less than the actual value of these homes. 9 out of 13 were leased already, with good, hardworking, paying on time tenants. And really the biggest issue was the transfer of the information and the transfer of all of the lease agreements and the accounting and the ledgers over to us because of the previous owners. And so great learning experience and how to transfer. Also, when we closed the deal, I went on vacation. Not the right thing to do. Never recommend that. But it was, I think that we're now a month and a half or just about 40 days into the investment. And it's been great so far. We're realizing that our rehab estimate was way too high, which is a good problem to have. You couple that with rents being late or rents being sent to the old owner and us having trouble getting them, it pretty much evens out. So far so good, but still learning every day. The other challenge that we came across with this portfolio is we have, it's always good when you're dealing with single family homes to check with zoning. We took some of the information from the previous owner at face value. Turns out a lot of that wasn't true. The vacant homes were vacant not because they had not because they were in poor condition or because they just couldn't find tenants. It's because they were zoned improperly. And so we have these homes that are set up for single family tenants, and 2 or 3 of them are zoned retail. So dealing with the city and making sure that we can rezone them into single family residential, get tenants in there is going to be a huge step for our investment. So I think that the big takeaway is don't take anything face value. Always do your homework there.
Absolutely. And you're a true operator. You, with the single family background, you get in there, you're actually, you're intimately involved with the renovations, with the operations. And so, with this larger portfolio, now you're getting a feel for what it's like to actually kind of more manage, it's not a complex, but managing the scale of it, having the multiple leases come in, dealing with leasing. So you're kind of getting an exposure to all facets of the business. And I think that's going to serve you well when you go towards, a bigger project, and whether you choose to manage it yourself or not, you'll be in a better position to manage the manager when that time comes.
Absolutely. Yeah. I think the biggest thing for us is managing the maintenance and the rehab. Because if you're finding properties that are heavily discounted, this one, there was operational efficiencies, but also there's water leaks that just have not been dealt with at all. There's there's toilet replacements, there's shingles that are damaged, there's landscaping that is really rough on these huge, massive corner lots, because it's in East Texas where the lots are massive. So I think for us, dealing with a leaky pipe in one home is one thing. Dealing with a leaky pipe in 13 is another. And we still have our single family portfolio that we're managing day to day. So if you can get the rehab, once again, our rehab estimates are a lot lower than what we thought. We were really conservative there. But if you can manage the rehab effectively, get people in there on time, make sure that one problem doesn't create 30 problems, I think you're in a really good spot.
So what's next? Now you've taken down this portfolio, which was the perfect opportunity for you because it was the blend of your previous single family experience and now with the scale of multi. What's next? What's the next deal look like?
Yeah, I think it's bigger. And it's been 40 days, so I think I gotta reevaluate my strategic goals and where I want my life to be in the next 2 or 3 years. And that's the next conversation that you and I are gonna have. But it's really figuring out which market I can tap into and where I can raise the most capital, because this first one was friends and family investments, and which was great. I loved it. It's been great working with them, and I think my next one is I'm hoping to get an actual complex, 50 to 100 units somewhere in Dallas Fort Worth, and that's expanding more and more. Where we can find something in Wichita Falls or in Terrell or even Beaumont, places like places really far out, I think are where the real value still is, and where it can be captured. So I'm hoping to do that probably in the next 5 or 6 months.
Beautiful. All right. Well, thank you so much for being on and doing this. I really appreciate it. If you want, you can let people know who are listening to this, if they want to reach out to you, if they like your hands-on approach, maybe want to be an investor or want to learn about what you're doing or anything like that. Let people know where they can find you.
Yeah, absolutely. I'm most on Instagram, so you can find me on Instagram at Eric Boshart, EricBoshart. Shoot me a message, shoot me a DM, and anything that you need, I'm here.
Beautiful. Perfect. Thanks again.
All right. Thank you.